What's up, guys? Welcome back to another video. Today we're going to go over some chart patterns, triangles, wedges, and flags to be exact. And after we go over this, just a brief explanation, we're actually going to take it to the chart so you can actually see how they are drawn and what they look like and what you should look for on a live chart. So with that being said, let's get into it. So first off, we have a falling wedge. This is a bullish pattern, or can be known as a bullish continuation pattern. As you can see, it consists of lower lows and lower highs. So what does that mean exactly? So as you can see, we get a move up. The sellers step in right here, pushing the price down lower. The buyers step in, pushing the price higher. The sellers step in again, but when the sellers step in this time, they stepped in at a lower price. As you can see, high point 1 and then high point 2, a lower high. And then the sellers step in, obviously pushing the price back down. And when the buyer stepped in this time, the buyer stepped in at a lower price as well, creating a lower low and a lower high. And it continues on this trend, if you will, until we get a breakout to the upside. And that is our falling wedge pattern. Next, we have a rising wedge. This is a bearish pattern or a bearish continuation pattern, depending on what the charts look like. But it's pretty much the opposite of the falling wedge, right? So we have higher highs and we have higher lows. As you can see, we get a move down. Our buyers step in, and then our sellers step in, and then our buyers step in again. But this time when the buyers stepped in, they stepped in at a higher price, creating a higher low. And then as you can see, they pushed the price up higher, and then when the seller stepped in, they stepped in a little later, creating a higher high. And then as you can see, it stays within this pattern, and then it starts to squeeze before making a move to the downside on the breakout. That is our rising wedge pattern. Next, we have a bull flag, or this is actually known as a bullish continuation. This will always be a bullish continuation pattern. This is probably one of the most recognizable, easiest patterns you will probably find, right? So stock takes a quick break before continuing on its bullish move. As you can see, we just have price action down here until we get a move up. Stock takes a break and then continues on its way. Next, we have a bull flag. This is a bullish continuation pattern. You have probably heard me say it before. When the stock goes on a run, it always needs to take a break so it can continue on its run. A stock that just goes in a straight line is a stock that will most likely make a sharp move down. But when a stock can make a good move up, take a break, and then continue on that move, that is a strong move, right? So this is pretty much what the bull flag is for us. It lets us know that stock's taking a break before going out on another bullish run. So as you can see, we have price action, strong run, gets in this flag, and then breaks out again. And obviously it's called a bull flag because you see the flagpole, the flag, and then the breakout. Next, we have the bear flag. Pretty much the same thing, but on the downside. Stocks need to take breaks either way. So we get to move down, get this flag, get a break, take a break, and then we have a move down. And if you notice, if you really want to be technical and sharp with it, flags, you know, a bull flag would usually go on like a mini downtrend, right? It'll look like it's coming down or reversing, but it's really just taking a healthy retracement before continuing on its bullish move. And even on the bear flag, right, it looks like it's reversing, going to the upside, but it's really just taking a healthy retracement before continuing on its move back down. Next, we have a symmetrical triangle. This pattern is bullish or bearish. We have lower highs, higher lows, and this particular pattern will consolidate until it breaks in either direction. And that's the way we would either take calls or take puts, or maybe if you're buying shares or shorting shares, whatever you want to do. But as you can see, we have a lower high, right? Each time this price comes back and the sellers step in, they step in early and earlier, right? We have a lower high, but it's the exact same thing on the upside as well. The buyers are stepping in early and earlier. So it's a battle between the buyers and the sellers. Who's going to take control? And usually whoever secures the breakout gets the aggressive move in either direction. This is probably one of my favorite patterns because it's so easy to play. Usually if you can spot a symmetrical, it's going to break out in either direction, and usually based on what I've seen, it's a pretty good break. It's a very good opportunity to make some money, right? So we have a lower high, higher low, we wait, and then whatever way we break is the way we take our position. Next, we have an ascending triangle. This is a bullish, and I'll explain why it says bearish in parentheses. But as you can see, we have a resistance level with higher lows. And if you haven't noticed yet, between every slide we've gone through, my explanations are super short and super concise. This is because for me personally, it was always better to make it super simple, right? I'm not gonna, have a whole paragraph explanation as to what this pattern is, what it looks like, what this, that, and the third. No, what helped me was just being able to identify the patterns, know what they look like, and know why they look like that, right? I didn't need all this, all the chaos, right? Because some people, they try to make it way more complicated than it is. But with me, you guys, for those who have been around me, you guys know I try to keep it as simple as possible all the time, right? Check it out. Resistance level with higher lows, right? We have a common resistance levels and we have higher lows, right? And you can see we have an ascending triangle. We make it move up, we reject, but our buyers step in sooner, make it move up, reject, our buyers step in sooner again before breaking out. This explanation: lower highs, higher lows, lower highs, higher lows. Super simple, right? Tight consolidation before the break. Stock takes a bearish flag. Stock takes a quick break before continuing on this bearish move. Move down, quick break, move down, right? Same thing. Move up, quick break, move up. Higher highs, higher lows. Lower lows, lower highs. And even so, like, I'm not necessarily always spewing out, oh, lower highs, higher highs, blah, 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 because that can get a little annoying as well. But the point is, when you're trying to teach yourself or really create an eye for this stuff, it is key that you don't make it, don't confuse yourself. Don't have a PowerPoint slide full of all these explanations in order to get these patterns down. Keep it simple. My explanations are really simple. Like, this is not to be lazy at all. Like, I'm really giving you guys, the method to how I was able to grasp these patterns as quickly as I did when I first started learning them. Right, ascending triangle, bullish or bearish. Now, the reason why I had bearish right here is because for me, I'm pretty neutral when it comes to triangle. Now, this is a bullish pattern as to why I had bullish here first. But I've had times where it was in an ascending triangle and it broke down to the downside and I played puts and made money, right? So that's just something to keep in mind. You go into it knowing that, okay, this is an ascending triangle, so I should expect a bullish move, but I won't necessarily cancel out this pattern if it goes bearish on me for whatever reason. Next, we have a descending triangle. This is a bearish pattern, but obviously in parentheses, I have a I have bullish for the same reasons as before, right? Support level with lower highs, right? So we have a common support level with lower highs, right? Support bounce, boom, seller step in. Support bounce, seller step in sooner. Support bounce, seller step in sooner before we get a break to the downside. Next, now I know I said flags, triangles, and wedges, but I had to just throw this in here because you'll see when we get to the charts. But this is called a inverse head and shoulders. This is the opposite of the head and shoulders, which is a bearish pattern. The inverse head and shoulders is a bullish pattern. Pretty much you have your left shoulder, your right shoulder, and you have the head down here. And then where the left shoulder and right shoulder meet, that resistance level is called the neckline. You will want to take calls outside or when it breaks the neckline. And obviously right here we have a break and retest where we continue on the upside. Now, before we move on to our charts, I want to go over one more thing. I didn't go over the entries, right? I didn't go over where we would necessarily enter these plays. So, and I've gone over it in other videos and it's all the same, but I'm just going to fly through it really quickly so you guys can at least see how I would look to enter on my headspace when I'm looking to enter these plays when it breaks the pattern. And it's pretty simple. It's just like any other video I've gone through, right? Descending triangle, say we get a break here. For me, I'm gonna wait on a break and a retest or a break and consolidation before we enter and get a strong move down. I never take the first candle after the break because it could be, a fake break, a false breakout, and it could go right back. It's always safer to wait on some consolidation and then a strong break or a break and retest, right? Even right here, I want to break, consolidation, and then a strong move up or break and retest, or depending on how well it consolidates before the break will, obviously determine whether I get in sooner or later. Because all the charts are going to look different. the charts you see here is not going to look like that on an actual chart with candlesticks. You know, those are more chaotic. This is a diagram with a line chart, so it obviously is going to look cleaner. Here, same thing. We break on either side, right? Breaks the downside, consolidation, then a move down, consolidation, then a move down, preferably with a lot of volume on those candles, right? Bear flag, right? We get a move, take a break, get a move down. Let me get some consolidation before the strong move down, right? Same thing. We get this. I'm not gonna just take it on this, you know, on a super, you know, as soon as it breaks, I want a consolidation before we get a break with some strong volume, right? Even here, rising wedge, we're up, down, up, down, up, down. We break, consolidation, and then a strong move down, confirming the breakout, right? Falling wedge. You know, we get in this pattern, we're down, we're up, we're down, we're up, we're down. We break, then we get some volume, consolidation, maybe a break and retest, and then a move up. But obviously it depends on what the, you know, what the price action does, right? Because it can do a bunch of different things. And obviously you have to practice your entries and exits out of patterns. It's not something that, I don't know, for some people maybe it's natural, maybe depending on how long you've been in the market. But if you're new to chart patterns, it may be something you have to work on. And like I said, we're about to go to the charts right now, and you'll be able to see different opportunities and possibly, you know, how you could play these charts as well. So let's go ahead and get to the live charts. So right now we are on, as I usually use, trading view. Today we're going to be looking at SPX. This is the S&P 500 index. We're going to be on the 5-minute chart. Now it really doesn't matter what chart we're looking at. The whole purpose of this is getting you guys, you know, letting you guys see what it looks like when we actually chart these patterns on the live chart. So let's get into it. First things first, we have a inverse head and shoulders, which is the only reason I had this on here, because it was literally the first pattern I saw when looking at this SPX chart. So let's see, we have inverse head and shoulders. As you can see, we have the left shoulder, the head, the right shoulder, and then we get a move up. And obviously the neckline is not going to be even like you saw on the other pattern, but as you can see, we take our entry above the neckline and then we get all this movement to the upside. This is literally a perfect example of an inverse head and shoulders, as you can see. Right, next, what do we have? We have, looks like we have a symmetrical triangle. Boom. Lower highs, higher lows, and then we get some consolidation and then a breakout. That is a really good move, right? Really good move up. Next, what do we have? Let's see what we have. Okay. Looks like we have a really ugly symmetrical here. This is another symmetrical triangle, a little longer, but it looks like we did get a symmetrical triangle for sure. And then just a little sporadic right here, fake breakouts on either side, which is why we wait on some consolidation and then a move up, or consolidation and then a move down. And obviously we got a break and retest right here. As you can see, let's zoom in just a little bit. We got, obviously we're ranging, and then we get a breakdown, retest, and then a move down. That is a clean symmetrical triangle move, right? We're just trying to, the whole point of making charts, or the whole point of understanding price action, is so we can literally just create some type of structure with our charts. You'll see at the end of this, we're literally going to break down a majority of what happened, you know, the last, you know, month and a half or so, last 1 to 2 months with SPX, because there are charts everywhere. Without them, or without, you know, support and resistance, things like that, charts look really chaotic. This is all so the charts just make sense. Once you understand this, trading becomes very easy, or much easier. And let me get rid of these because I just want price action for now. Right, so let's make this a little bigger. All right, so far we've had inverse head and shoulders, symmetrical, consolidation, breakout, symmetrical, break and retest, boom, boom. Now we're here. Let's see if we could have anything. Nothing right here. Let's see. Do we have something right here? We may, let's see. This is a little ugly, but we may have, this may be another symmetrical right here. We may have another symmetrical. As you can see, higher lows, lower highs, and then a strong breakdown. Yep, that's another symmetrical. So we just met our third symmetrical triangle. We got a lot of those right now. Next, we have some consolidation, and this is something you'll see a lot of, right? So a lot of times, you know, you're not always going to find price action. Price action isn't, or you're not always going to find chart patterns. Sometimes it's just price action. You have to wait for the patterns to show themselves. And a lot of times that takes patience. You know, for me, one of the things, you know, I struggle with, you know, in my earlier days, and sometimes even now, I get too hasty, too impatient. I'm so eager to get into the market and make some money because I just love trading, that I take positions too quickly instead of letting the price action let me know what it's going to do, right? And sometimes you'll see, like for example, right here, this is just accumulation. This is just simple price action. It's just consolidation, as you can see. Right, there's nothing right here. It just made a move down and it took a break, and that's pretty much all it did. But if you want as well, you could definitely, you know, take moves outside of this. For example, this is the 5-minute chart. If I'm, you know, really trying to get in and out of plays, you know, I see that it's consolidating right here, and I may take puts under the break, right? Really quick buying and sell opportunity. Buy right here, sell right here. Obviously it's risky because there's no consolidation and just a quick move down and a quick move up. Really just a false breakout is what I would call it. But, you know, sometimes, you know, you're not going to always find price action. So that's important to know. As you can see, it broke above this level. So we consolidated, you know, say you wanted to take puts under this level, you can. We have a break, a retest, and then we break this level. You could definitely take calls above this level, this, because it was just ranging right here. So above the range, you could definitely take calls right here. But if you're just trying to stick with chart patterns, your next opportunity is definitely right here. We have a rising wedge, right? We have a rising wedge, which is a bearish pattern. And then we have a move down, right? So this is really clean. This is super clean. Boom, rising wedge. So we went from a consolidation, a move up, a move back down, went into a rising wedge before really a nice strong break to the downside. Obviously right here, it looked like we bottomed out, right? We bottomed out clearly, you know, we weren't going any lower than this. So if you know your candlestick patterns and just understand support and resistance and basic price action, you will look for either another aggressive move down, or you will look for a reversal. And clearly we got a reversal. With a move like this, I only have to assume that there were some type of, you know, just really good news that hit the market, causing SPX to just run. As you can see, it went on a run. You know, we take our price action up here, and then look what we have. We have a bull flag, right? Remember, a bull flag is a bullish continuation. So we have the flagpole, the flag, and then a nice move up. And then we get two really nice candles, and look right here. Looks like we have another bull flag right here. So we went from rising wedge to we bottomed out, hit the reversal, crazy run to the upside. We then have a bull flag, continuation, bull flag, and then continuation. Then we come down here, really, you know, aggressive move down. If you know your candlestick patterns, we have an inverted hammer, which is a bearish reversal or bullish reversal pattern. Boom, we hit it. Now we make a move up here, and we have more price action. Now, if you're new to chart patterns, you may just think we don't have anything right here. But me, the first thing I see is an ascending triangle. Remember what our ascending triangle qualities were, right? We have higher lows, and then we have a common resistance level, right? Resistance, 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 and then we get a breakout consolidation, and then our entries right here, and then we continue on this run, right? So look at that. We look how much we broke down so far. We're breaking down everything. We know we know everything that's going to happen because we know our chart patterns. Inverse head and shoulders, symmetrical, 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 consolidation, rising wedge, bottomed out, aggressive move up, bull flag, ascending triangle. Like, we're really tagging it right now. We're really tagging it, right? We get a move up, we get another bull flag, right? Then we get consolidation, a move up, right? And now this is just price action. This is just a continuation out the bull flag for the rest of the day. The next day we gap down a lot. Let's see, what do we have here? Do we have anything? Sometimes you gotta stop and look. We don't look like we have anything right here, and I'm not gonna force it, right? That's one thing I'm not gonna do. The only thing I could potentially see is that we did have some resistance right here. We got an inside candle right there, so that is a bearish. That lets you know that this price action right here showed me it was bearish just based off the candles. If you are someone who just set on patterns, then you could have possibly drawn a little something right here, just that consolidation and then a move under. But if you know your candlestick patterns, you're already possibly taking puts right here anyway, just based on the price action. But we do get a move down. Let's see. Looks like we may have went into kind of sort of like right here. This is one of the examples I'm talking about. It low-key looks like an ascending triangle, right? Because we have higher lows and a consistent resistance level, but we broke out to the downside. Remember, ascending triangle is a bullish pattern, but like I said, I have parentheses and bearish for something like this. And this is just structure. And one thing that you'll realize as well is that these patterns, anytime you see price action start to squeeze, like for example, we start off in a wide range and then we start to squeeze as we go further and further, there's always going to be a move. So even if you're not very confident with price action yet, for example, let me go back. Right, you're not confident with price action, you don't really know how to draw patterns yet, that's okay. What I want you to start looking for is this, like a squeeze. So for example, we have the price action range is pretty wide right here, wide, but then as we go further and further, it starts to get tighter and tighter and tighter and tighter. It's like the pressure starts building up. Kind of like you shake a soda bottle, right? You shake a soda bottle, the pressure starts to build up, and as soon as you open it just a little bit, it goes, right? It bursts. So with this, we have a wide range, and then we start really consolidating before we just get explosive move, right? Wide range, tight consolidation, explosive move. Wide range, tight consolidation, explosive move. Wide range, tight consolidation, explosive move, right? So even if you don't know your chart patterns, or even if you think you may be drawing your chart pattern wrong, right? You can draw a chart pattern wrong. Like, it's not everybody's pattern is going to look the same, and that doesn't mean either of you are right or wrong. Some people just see it differently. And with this, it's as simple as, okay, I see a wide range and the price just started consolidating. So even if for some people this isn't an ascending triangle, I just happen to identify that the price action started to build up a lot of pressure. So I just anticipated a move, and whichever way it went was the way I was going to take. And that's how I got this right here. Okay, so after we got this move down, let's see. Nothing. We may have a really ugly, let's see what we got here. We may have something right here, really ugly though. Right, look like we have a rising wedge right here, right? Wide range, tight squeeze, aggressive move down, right? And this would have been a bearish continuation pattern. So we went into this ascending triangle, broke to the downside, made a move down, took a break, healthy retracement, aggressive move down, and then we made money on put options on the downside. Next, what do we have? We're not going to force it. But you can see that just price action doing what it does. We may just went on a nice uptrend after this. Maybe a bottom tweezer right here. Candlestick pattern if you don't know. Went on a nice uptrend. Clearly hit some resistance right here, right? So I'm already paid attention to that just because I like candlestick patterns as well. Right, we hit resistance right here. So I'm already paying attention to this right here. And then obviously you can see that we had support right here as well, and then we broke out to the downside. So obviously, if you're somebody who understands price actions, you know, with candlesticks, you could definitely take advantage of puts right here as well. Let's see, what do we have? Looked like we had just started went on took a move up. This may be a bear flag as well. Like, it's really ugly, super ugly bear flag, but we did have one. Bear flag, consolidation, breakdown, consolidation, breakdown. And it doesn't have to look pretty, guys. Like I said earlier, the diagrams we went over, price action doesn't look like that. It's never that clean. You know, maybe in some situations it's pretty clean, like the inverse head and shoulders we saw, a couple of the wedges that we already drew. But a lot of times it's not going to be clean. So get that out your head. You gotta, you know, you have to build an eye for it. You know, next we have, looks like we have a possible wedge right here. Let's see. Not really. Or yeah, this is a rising wedge. It's just just didn't consolidate as tight as the other ones did. But as you can see, wide range, tighter consolidation, aggressive move down. That's just a long rising wedge. We come down here. What do we have? This is ugly. This is ugly. I don't want to force it at all. The forcing is not something I like to do, right? But clearly there's something right here. Let's see. We did get a move to the downside, right? So we may have just had, I don't know. Yeah, it could be, depending on how you play it, you could just have simple support and resistance. Technically, this would be a descending triangle, which is a bearish pattern. But like I said, I'm very neutral when it comes to my triangles. You know, I could have tried to force a wedge or something as well, like whatever. The point is, I recognized immediately that we had wide price action, and then we started consolidating, not really moving anywhere before getting a breakout. So like I said, I'm not trying to be right. I'm not trying to be pretty. The whole point of me drawing these chart patterns is me trying to make money, right? So I don't care if it's a ascending wedge, whatever. Like, if I see something, I'm gonna put some structure to it, and then I'm gonna base my actions off the structure that I can make. A lot of people, you know, there's this thing with traders, like even like traders that aren't even successful, they're so obsessed with being right. Oh, that's not a thing. That's not what that is. This is that. That's not what that is. This is that. But y'all both broke. So who are you trying to tell? You know what I mean? I made money doing exactly what I'm doing now. So whether look, I don't care. It could be ascending triangle or whatever you want to call it. But if you ain't make no money off of it, then you're just, congrats, you're right. Right? So we're just here to make structure. Next, what do we have? We're gonna move up. Nothing really right here. Nothing. No chart patterns. No chart patterns. Let's see. This was one entire day. We get to gap up, and then we just kind of stay within this range. There's nothing here either. Let's move on. Move down. Move up. Let's see. We got something here. Looks like we have a rising wedge, right? Move down, rising wedge, wide price action, tight squeeze, aggressive move down, consolidation, aggressive move down, consolidation, aggressive move down, right? So this thing just really went on an aggressive move down. And this may even, you may even call this a bear flag right here. Remember I said big move down, consolidation, big move down, right? That is definitely, yeah, that's definitely a bear flag. And you also may have one right here as well. Right, so two bear flags. So rising wedge, bear flag, move down, right? And then we just kind of start going on this downtrend for the rest of the day. Strong move right here. This might have just been news, just a dump like this. I wouldn't be surprised if it was news with all this. This is February 11th, so with all this crap we have going on right now, Russia, inflation, interest rates, you know, all that stuff, I wouldn't be surprised if there was just news that came out causing this to just take a dump. Right here, this is just choppiness, right? This I can't force a chart pattern. This just look really, really choppy, right? That's what this is. There's really nothing right here. There's some candlestick pattern. If you know your candlestick patterns, this is a bearish engulfing at the bottom of a downtrend, which is a reversal candlestick pattern, a bullish reversal candlestick pattern. So that is definitely, I definitely would have took that, no hesitation, after this candle just confirmed, and then rolled that to the upside. Probably more news that caused us to go back down. Let's see. I don't want to force. Right, we may have had a wedge right there, a rising wedge, and even right here, right, you can see that the price action started off wide and kind of made its way into this tight consolidation before breaking out, right? So we may have went, because I can always, it was bothering me when I passed it up because I just said we had a bearish engulfing. But if you look right here, we had wide price action, and then when we started, the pressure started building up a lot right here, and then it just gave in. We had a bullish engulfing plus a falling wedge. Yeah, so that's two confirmations to the upside, right? So that's a pretty nice move. And then to the upside here, I want to say we have something. But I'm not quite sure here because it's not the prettiest. And like I said, I don't like to force, but I can see that it is in the trend right here, right? So for a little bit, this is the 5-minute chart. So for 30 minutes or so, we did have a nice uptrend, right? This may just be a bullish channel or just a nice consolidation phase right here to the upside before we broke down. So we were just trending up, broke down to the downside, and then made an aggressive move down, right? So even if I don't know where the pattern is, or if there is a pattern, I can always make sense of something where it just looks chaotic. I obviously saw that we were going on an uptrend after this bullish engulfing falling wedge, and then we broke under it and then made a move to the downside, and then now we're up here. What do we have next? Right, let's see. Right, this may be an ugly rising wedge. Sometimes you gotta look at it different. Glasses on, glasses off. I don't just to make sure you're looking at the right thing. This looks really ugly. This may be a rising wedge though, as you can see. And this is what I do, guys. When I'm looking at different stocks, when I'm charting, I'm just making structure. So even if it doesn't make sense, I can see where the trend line support was common, the trend line resistance was common, and we broke under, right? Broke under, consolidated, made a strong move down, and then we had an inside candle, which is a reversal, bullish reversal pattern or candlestick pattern. Boom, made a move up, and then now we're here. Do we have anything right here? Do we have anything at all? Nah, I don't want to. That would be a force. This would be a force. Me drawing this. There isn't really anything here, so I'm just going to delete that. Just really bad looking price action. Now we're down here. Let's see what we have. What do we have here? It looks like we just went into this consolidation phase, right? We were just consolidating after this move down. Or this may be a freakishly long bear flag, right? Because we did get an aggressive move down after that, right? Had aggressive move down, super long bear flag into a bearish continuation pattern, right? And sometimes if you go on, like, let's see the 15-minute, let's see if we could, right? This is what it looks like on the 15-minute. So that doesn't look as dramatic as before, where we have a bear flag. Like the bear flag makes sense now because it looks a little better. It's not as long. And you go on the 30-minute, you can see how we had a move down, bear flag, move down. Whereas you go on the 5-minute, where we go? Where are we? Right, you go on the 5-minute, then it just looks super long, right? But that was a bear flag, as you can see. Then we had a this maybe I don't want to call it an ascending triangle, but it looks like we were just ranging right here and then broke out. Because ascending triangle, I'll at least want, it looked like our support and resistance was pretty consistent, right? So I just would have had just a range right here, just consolidating before making a aggressive move out. And honestly, if you want, you could call this an ascending triangle, right? Yeah, I would call this an ascending triangle right here. I wouldn't just call it a range, right? So we had a move down, bear flag, maybe even if you really want to respect like the candlesticks, like the wicks, and depending on when you drew it as well. Like if you drew it before these other two candles came up, you know, you could have definitely had a rising wedge right here, because I'm only drawing it after seeing all the candles form. But if you draw, say, you know, and I actually think we played this. Yeah, if I remember correctly, we played this exact play, both of them. I called this in the Blueprint Trading Group. If I can find the screenshots, I will post it. You know, it will be a pop-up on here right now. But we literally played this exact play in the Blueprint Trading Group. Yeah, I'm pretty sure we have this screenshot as well. We had a move down. We went into this rising wedge because I remember I drew it early, right? I drew it before these other candles form, right? So this is a rising wedge. Then we played the downside, and then we went into this ascending triangle. Like I said, it depends on when you drew it. If I drew it right here, that's 100% an ascending triangle. And like I said, I'm gonna, yeah, you'll see these screenshots because I'm 100% certain now we 100% played this. And then we took it to the upside, and then boom, we caught this move, this downside, and then we went into this ascending, and we caught the upside as well. Yeah, because we had a guy make like $7,000 in a few minutes just off this play. Next, let's see what we have. I automatically see that the range, I see the wide range, and we start to squeeze, so I know we have something here. Oh, that's ugly, man. Let's see. Right, and it really depends on when you would have seen this to potentially draw it, right? Like, so it may look like just a really ugly ascending triangle with two false breakouts, right? So we went to the range, boom, boom. Price action or the resistance level stayed consistent. The lows got higher. We really started getting into this range. And then we look like and if you want to really break it down, you can obviously see this as well. It created a new resistance level, right? Check this out. So we made a move up, we rejected off this level, bounced, rejected, and then broke, and then really consolidated before breaking under this level, under the ascending triangle, and then breaking under the new support level, and then had a massive drop, absolutely massive drop, right? And then you may have a really ugly bear flag here, like a really ugly bear flag, break down, move up. If you know your candlestick patterns, you're definitely playing that to the downside. And then what do we have? I gotta look at it funny again. Do we have something here? We may have something. Let's see. I mean, that's ugly. That's super ugly. Right, may have that wedge and then break out to the upside. Right, got this bull flag right here. Move up, and then yeah, and then that's all we have right now. And then we gotta wait on this. Maybe, and this is still forming, but we may have something right here, depending on what this stock does in the or index. This isn't a stock. This is SPX. But depending on what it does, you know, next week we may have something going on right here. So as you can see, guys, you know, if I zoom out, you can see that we literally broke down SPX over the last 2 months, and we didn't have any indicators. We didn't draw any fancy stuff. We didn't have whole bunch of lines and, you know, all them indicators that people say you can use to make $1,000 a day, whatever it is. We kept it very simple. We stuck to a few different patterns, and you can see what that brought us. And, you know, one thing I would but I would recommend you guys do is just, you know, find a few different chart patterns that you really want to get good at, that you may like, and then practice those. Go on different stocks, Apple, Roku, whatever it is. Go on different stocks and practice drawing those patterns. The more you draw them, the better you'll get at them, right? I didn't get here overnight just understanding patterns and price action. I had to really apply myself to be able to know how to do this, right? We can go all the way back. You can see how we literally broke the last 2 months down, right? And there's a lot of money right here, a lot of money to be made. So if you enjoyed this video, please like and subscribe. If you have any questions or video requests or whatever it is, just please leave it down in the link below. If you're interested in joining the Blueprint Trading Group, there is a link below to join that. I call out all my plays there. We go over stuff like this on Sundays before the market opens, as well as the watch list. So if you're definitely interested in that, we'd love to have you. And with that being said, I will see you guys in the next video.